All right, guys, back to work. Tuesday evening already, 8th day of February 2022. My name is Joseph, and as always, welcome back to your nightly newsletter. Then watching for the first time tonight, it's great to have you with me. My job tonight is to help us find the best trades, setting up for Wednesday's trading session. I got a great video in store for you guys tonight. Charts are all ready in the background, as you can see. Got the oil, got the Nasdaq, got the S&P 500. Glad to see we got you tuned in right along with us. Got a lot of great trades setting up for Wednesday's trading session. Got some relatively big moves higher today in these markets. Oil, of course, right, rolling over early in the morning. I'm going to cover all my favorite trades in tonight's video so you know what to look for tomorrow. I'll also cover some stuff to avoid to keep yourself out of trouble, whether you're trading on your own or whether you're trading with me tomorrow morning in our daily trade room. Now, of course, as always, before we jump in and get the party going here tonight, I just want to make sure to remind you, make sure you subscribe to our YouTube channel. I publish this video newsletter every evening, and I don't want you to miss tomorrow night's video, so make sure you subscribe. A lot of this stuff is very time sensitive. Hit that little bell icon so you always get notified every time we publish something new. Also, too, don't forget, if you have any questions tonight, drop those questions in the comment section. I would love to answer any questions you might have along the way. And if you enjoy the video as much as I enjoy making it, do me a favor, hit that like button here tonight on the YouTube video. Appreciate you guys tuning in every evening to watch this video newsletter. Now, enough of the intro. Let's get ready for Wednesday, right? Make some money on Wednesday here. Where are the best trades setting up for Wednesday's trading session? Well, as you can see right now, everything besides the oil right now is pretty bullish, right? S&P is bullish. Nasdaq is bullish. Oil, of course, is bearish after getting clobbered, a little bit after midnight last night. The E-minis are bullish right now. S&P's bullish, but I'll tell you, with a range below us and major areas of resistance above us, the buyers have all the momentum right now, but the sellers have all the real options at this point. Now, of course, that does not mean we can't buy this market, right? Buyers would love to buy some dips, maybe buy some breakouts. I got a really great couple breakout patterns I'm watching for tomorrow, but obviously too, with all this resistance and a range below us, I would love to get some shorts going off of these highs here. There's a lot of ways to both buy and sell the Nasdaq and the S&P. We're going to go over all of this stuff obviously tonight in the video. Oil got knocked down, right? Oil got knocked down early, just after midnight, like 2:30 or by like 5 a.m. this morning. By the time we came in this morning, right, it was all bearish. We're basically bearish right now into a trading range on the oil. I've got some really nice areas of resistance up overhead. We'd love to short some pops. I also think too there's potential this market may begin to continue going lower here, and so I'll talk about some breakouts to the downside as well. The buyers are not completely knocked out just yet on the oil. Obviously, we've got a lot going on right now still in the Ukraine drama. Who knows? The buyers definitely have options. I will talk about some reversals here tonight, but beware, the buyers have the work cut out for them right now to really get this thing turned around. It's definitely possible. I'm going to make sure you guys know how to trade the long side here on the oil as well. So not to worry, we're going to break this down into all the favorite trades and what to keep an eye out for tomorrow. But speaking of tomorrow, though, let's make sure we get on the same page as far as the news is scheduled for tomorrow. Wednesday, the next couple days, as I mentioned in the newsletter video last night, the next 2 days are pretty much where all of the news is going to be this week. Again, as we mentioned last night, it's the second week of the month. It is not known for having very many news events. You can see there's not really much here the entire week. The big news for tomorrow will definitely be the petroleum status report, that weekly inventory report for all you oil traders out there. Remember, you want to give that at least about 10 or 15 minutes of a buffer on both sides. If you're trading oil like we do in our trade room, think about 10:15 to 10:40. 10:15, things start slowing down. People start kind of gambling ahead of that news report. By 10:40, the news has come out. We get some cleaner charts, and we can get back to trading. So think about that buffer, right? Kind of 15 minutes before and 10 minutes after, sitting on hands around that petroleum status report. Obviously, that will not affect the Nasdaq or the S&P tomorrow. That will impact the oil futures. So keep that on your radar tomorrow. Not on this calendar, but tomorrow we do have Uber's earnings, which of course have potential to shake up the Nasdaq tomorrow afternoon. Be aware of that. Trade Nasdaq tomorrow into the close. The last half an hour tomorrow may be a little bit frothy, a little bit jumpy, a little bit extra volatile as traders manipulate positions or balance positions ahead of that. What is anticipated to be a pretty big earnings report coming out tomorrow just after the close. And then don't forget, as we go later on in the week, we got more important earnings on Thursday. We got one of the biggest news reports of maybe the month of February, that CPI report on Thursday. So we're going to come back tomorrow and talk more about some big news coming tomorrow. But again, for tomorrow's trading session, though, the petroleum status report, that's the big news during the U.S. markets. And then, of course, that earnings report, obviously that will only affect the Nasdaq, right? Shouldn't affect the S&P or the oil. So keep it on your radar here for tomorrow. News looking pretty wide open, right? We're going to talk more about the bigger news in tomorrow night's video. So make sure you come back and see me there. But first, let's get ready for Wednesday, though, right? Where are the best trades for Hump Day trading session? Let's jump in here. S&P, Nasdaq, crude oil. Let's grab the S&P first. Like always, we'll jump right in. What's the most important? What's going on right now? What's the most important thing affecting this market here? Well, there are probably, I would imagine maybe three different, components that are affecting this market right now. One of the components is obviously the day began in that choppy range. I told you guys last night the best trade was going to be to wait for a retest of that low, which actually didn't happen until right there, and then the 1, the 2, and back up. I'm not sure how much clearer we could have been in last night's video, right? So, nonetheless, though, that was, of course, the kind of the beginning of the morning, right? That trading range chopping around. The one component on this chart, though, one component was the strength of that reversal. Anytime we see a strong move like that, what do we expect? We expect a retest, right? The same reason why last night's video I said, hey, it's a strong move down, so be aware of the retest of that low and then get long, right? So that was kind of the idea behind last time. Same thing here, right? So big, strong move up now. Look where we are, right? We just retested that high. So is this a good place to get long right now? Certainly not. No, definitely not. A little bit risky to get long up here. Can I get short up here? Yeah, that's definitely going to be an option. An option we'll talk about here in just a moment. So we definitely have one factor there, right? Strong move up. We've retested that high. As we say in our trade room, mission accomplished. The buyers completed their mission. The second thing that I think is a big impact on this is the trading range. It's a very good example, right? Market jumps up, end up pushing higher, obviously, but we rotate back and forth, double tops, double bottoms, moving average flattens out. That's a trading range. Why is a range important right now? Well, because the amount we go below the range is oftentimes equal to the amount we go above the range. Think of this now as kind of like a boundary, right? It's a wall of resistance now up around this high. So not only do we have resistance above us, but remember, ranges, they're not just rectangles. They act like magnets, right? They act like magnets. And so we potentially now could swing back in the other direction. Again, this is another reason why I say it's tough to want to be a buyer right now. It doesn't mean you can't right now. The buyers can buy underneath that range, absolutely, right? The buyers could buy a breakout, which brings me to my third component here. And that is, and we talked about this last night on the video, you can see we're at a major top right now. Right, there's a major top right here. So you have to think all the bears out there are going to look at this area and say, just give me a chance. Just give me a chance to short this thing off the high. Now, obviously, we're very bullish right now, so the bears have to make it work here. But if we can break out of this area, we have a ton of open space until we get up around that 86 area, right? That's your next big milestone up top there. And so I'll tell you, that's one of the best opportunities for the buyers tomorrow. If we can poke through this area of resistance, the big question though right now is if, right? If we can poke through this area of resistance. So those are the biggest, kind of the big three, the big three, kind of components that I see as kind of affecting this market, right? We've already retested the high. Right? Now we need more information. We need more buyers. Show me some more. Show me you want more, and I'll go with you. Right? We've got the range. pendulum overhead resistance, ranged magnet, and again, a lot of levels of resistance up overhead. What do the buyers want to do? What do the bears want to do? The sellers have it pretty, again, they kind of hold all the options right now, right? The buyers have momentum, but the bears have the options. The bears would love to short off the high. If that short turns into a reversal, they would love to go back to retest those lows, right? We definitely know that for sure. The buyers have options. They'd love to buy off this low. There's a great area to get long over here. There will be a little bit of a challenge to that long. We'll talk about that in a moment. Or the buyers would love to break this high, show me like a breakout pattern up here. We'll talk about that in a second, and push up. Again, look at all that open space up there, right? Lots of open space here. So as it goes higher, as it goes lower, how do we buy it? Right? How do we sell it? Well, right now, if I want to be a buyer on this bull market, what you really want to think about is buying either here or buying up here, buying up here. And so what you want to look for here is this deep pullback. Now, this kind of reminds me of those 4 types of pullbacks, 4 types of pullbacks that we look for in our trade room. There may be, this is a relatively strong move, and you could definitely argue that this is what we call a spiking channel. Now, spiking channels are really cool because the base of that channel is well known for being a very good area of support. Now, in this particular case, it's not obviously the best area because it's right inside that range, and we haven't solved the problem of buying right into that high here. Where I'm getting at with this, though, is that I think on the buy side here right now, right? On the buy side here right now, I think we could definitely qualify the idea of a pullback and a trap entry, right? A trap entry for a retest of the high. It's going to be a little more aggressive. It definitely is more on the aggressive side right now. But again, if you follow the idea of a strong move up, wants to retest that high, wants to complete this pendulum swing, I think that's a very valid option here if you're willing to be a little more aggressive, right? So as we always say in our trade room, shallow pullbacks are great with traps, right? So trap setup will be what I'm looking for on a relatively shallow pullback. What the buyers would really like to get on the pullback is probably one of these 2 pullbacks. Whenever we have a really deep pullback on our hands, we always want to think about stuff like this. For example, a 2-legged pullback, right? 2-legged pullbacks are pretty common. Let's say, for example, right, we pull back and we kind of bounce, right, as we go, right? Now what I can do is draw the trend line over, try to get up and over, and use that trend line for a buy setup. Right? Didn't get a very good example of it here, you'll notice, right? There wasn't much right there to work with. But this is one way to look to buy this if we get that pullback all the way up the high. Right? That's one of, or I guess the second of the 4 possible kind of pullback opportunities. The first one was that shallow pullback trap. Second one, think about that 1, 2, right? Find that trend line and hit it. The third one here is the one that you got to be a little more careful with. Now, remember I said last night, the best way to buy this was that big move down, was to wait for the retest of that low and then get in from there. So that's the same type of idea you would think on this. When we rotate off the high of a range, momentum can get pretty strong. So I think probably the safest long trade for tomorrow, right? Safe isn't always the best, right? But the safest one will be to wait for that nice pullback, right? Wait for now those bears to come in, get that retest. Again, it's the same idea we talked about last night, right? And then at that point now, let those bears try a couple times. Let them try once, let them try twice. All their stops now will be right above those highs, and you can buy right into those stop losses, right? These are called 2-try failure patterns. Okay, that's one way to do it. That's probably the safest way to do it. Another way to do it would be we wait for that deep pullback, and now we give the bears the benefit of the doubt. We let them try once, we let them try twice, and we go after a trap, right? Go after a trap off that low, right? Same idea. This one's a little bit more aggressive because obviously you haven't retested that low yet, right? These are called 2-try failures. And I want that trap set up there because, again, that trap will really make sure we get as low as we possibly go, right? We talk a lot about these in that free trading course that most of you guys have taken. And by the way, if you haven't taken the free trading course yet, if you haven't learned these traps, these failures, these pullback combinations, what I'll do is I'll put a little link up for you here in the upper right-hand corner. I know a lot of you guys have grabbed that course already. But if you haven't done so, grab that little link that popped up there. Learn the entry setups, all the rules, but most importantly, in that free trading course, you'll learn when to take the setups and when to skip them. Making money in the markets isn't about finding winning trades. It's about avoiding losses. If you're sick and tired of taking too many losses every week, that free trading course there with our 3-step strategy, that'll clean you up real quick. It really will. Give you all the rules and the roadmap we use in our trade room. So grab the link there, right, and learn those setups, when to take them, when not to take them. You'll see a lot of examples in that class. Now, as we go higher here, right? How could I buy it as we go higher here right now? What's the best way to get long? Well, again, we've got a bunch of resistance here. So what you really got to see at this point now is we have to get a breakout. Right, we got to get a breakout, going higher here. There are a lot of different types of breakouts. I'll talk about a couple of them here, and we'll cover a few more on the Nasdaq and on the crude oil. All right, so if you want to learn all the breakout patterns, we'll talk about some more as we go later on in this video. Here are 2 breakout patterns that I think are very well. Again, we'll see what we get. We're not predictors, right? We're not in the business of predicting. We're in the business of reacting to what we get. So here's one to keep in mind. So the pendulum swings right there. Let's say we get that 1, 2, 3 breakout pattern. We take out the pendulum swing. The buyers come in, they hold the pullback, and they jump off that moving average. Right? These are, again, 1, 2, 3 breakout. Now, once we get that 1, 2, 3 breakout going higher, and we're seeing this market push through this overhead resistance, leaving this range behind, now we can do is we can mark up the high, right? High to high, bring it down to that low. And one of my favorite entries here is to get just below the moving average, which will usually put us in position for a trap setup or a failure setup, right? Or a pullback setup right off of that low. Now, again, I don't know which one we're going to get at that point, but I do know, though, if we get that 1, 2, 3 breakout pattern, right, I want to buy that first test off the low of that channel. Now, where would my target be at that point? Right? What would the target be? The target would be, remember, use the first leg, right? The size of that first leg, that'll be your breakout leg. That leg will almost always be equal to that leg right there, right? Again, we get a pretty good idea of where the market wants to go, but, obviously we're not going to leave our targets up at 73. You could, right? You definitely could, but you can kind of fine tune that target by going 1, 2, 3, marking that new channel, grabbing that entry, and then again, size of the breakout leg, usually going to be that size of that leg as well. All right, so keep that in mind as we go higher. Another possibility here would be that kind of break, that pop and grind, right? That spike and grind. So remember, there's a big move down, right? There was a big move down before. So if all of these bears, if they all give up on this, right, and everybody gets long, what'll happen is the market will start to pop and grind, right? It'll look like something like this, right? See how it pops up like that? This is a short squeeze, right? That's a short squeeze. Okay, those are bears getting out right there. Okay, see how it pops up and grinds and grinds and grinds like that? Okay, that's the look, right? That's the look that you want up here, right? So what does it do? It pops up and it grinds and grinds and grinds and grinds. I'm not going to chase it. I'm going to mark up that channel nice and tight off those highs, bring it way down to that low, and start looking for swings, right? Then wait for that nice pullback. Get below the moving average. When you get below the moving average, that's your chance to trap in those bears, right? And hit them with your trap setup, your failure setup, and your pullback combination, right? It's all about finding channels when a market breaks out of a range and goes into a trending environment. Now, again, these are just two of them, right? I got a couple more up my sleeve here. We'll talk about those breakout patterns a little bit later. How do we sell? How do we sell this market right now? We haven't talked about the short side yet. So how do we sell it? Well, again, really anywhere in this area. So even if it goes higher here, we can still look for that short off the high here. What's my biggest concern? momentum, right? We have a retest of that high, so that's good. So now what I want to see is I want to see 1, I want to see 2, and I'd like to see, if possible, a trap up there, right? Just we saw that little trap right there, right? For that long, right? We retest the low, 1, 2, back up. That same idea there is the same idea over here. We've already got the retest the high. So now let's go 1, let's go 2, get that trap. I can look for a hidden channel off that low. I want to get that nice strong signal, and we can dump it down off that high, right? A 2-try failure pattern. Again, buyers failing, we'll give them the benefit of the doubt because it's so bullish right now, and we can short down off of off of that high there. Now, what if we do this? What if the market was to roll like this and kind of start to let's say start to kind of grind lower here, right? What you'll do is find that new channel up top there, right? And be looking for those traps up top there, right? Those traps off that channel. That'll effectively be the same thing. It'll be 1 and then 2. We'll talk more about entry counting and counting numbers. We'll talk more about tomorrow. But if it grinds down like that, right? Look for those traps, right? Those traps, those buyer failures, those pullback combos, the same entry patterns you guys have learned in that free trading course. And again, if you haven't grabbed it yet, though, that link will be in the upper right-hand corner. Now, this could get really good. We could see this market here go 1, go 2, right? Drop off that high and just keep on going. Right, a lot of times when this momentum builds, right, you'll get that pendulum swing, it'll keep on going. So if the market rolls over and really starts to run, how do we trade that thing short? Think about that same, we talked about this 1, 2, 3 breakout going higher, same idea, right? So if we end up taking off the downside, if the bears can hold the pullback off the moving average and go through that low, remember, they didn't do it here. So it's not a guarantee they're going to get that short to work. That short may struggle a couple times and go right back up into that trading range. Okay, look what happened back here. Okay, so it may go lower, it may pop right back up. But if those bears can hold that 1, 2, 3 reversal, now we can drill down, find that new channel, mark up that low, find that channel high. And again, I'm obviously simplifying this right now, right? But that'll be our trap setup, our failure setup, our pullback setup, the setups you guys learn inside that free trading course, right? And then don't forget, where's my objective? Yeah, they want to get back into this range down here. That's a giveaway. But remember, the size of that first leg is oftentimes the size of that final leg. That'll help you kind of fine tune that final exit on the S&P. All right, guys. So let's keep moving. Let's go to the Nasdaq here. I'm going to spend all my time tonight on the E-mini. Same relative idea here on the Nasdaq. We'll cover a few more kind of variations of this on the NQ. Same basic idea here on the NQ, right? We got 3 basic components. We have a relatively strong move up. Right? We know that strong move should retest the high. We're sitting right here right now. Now where do we go? Do we keep going higher? Do we curl off that high? Right? We need more information here. Second thing is, of course, is this range. Okay? You'll notice the amount we went below is equal to the amount we went above. Great spot now to be looking for the opposite side of this market. Right? We also know overhead here, lot of resistance. You can see a lot of areas of resistance here above those highs. And this is a lot like last night's video, but kind of the opposite direction, right? Like I mentioned in last night's video, even if we kept going lower, we're still looking for that long going higher. Even if we keep going higher here, we're still looking for that. We're still in a good spot to get short, right, off of that high here. So we already talked about most of these on the S&P already, right? We talked about as this market pulls back, watch out for that 2-legged pullback off the high, right? Get that up and over and go. Okay, we talked about if it really rips lower here. We talked about how probably the safest bet here was to wait for the retest and then go 1, 2, 2-try failure and back up in. Right, we talked about that before. And then again, if it just rips lower, the more aggressive entry on it will be 1, 2, right, and then grab that trap. right? That trap would be, again, still pretty conservative, right? But a little bit ahead of that retest, right? So bears try once, bears try twice. All those stops, right, are sitting right above that high here. And we can buy right into those stop losses. Okay, so that's again, those are the same ideas there we talked about. And again, right, relatively strong move higher here. So a shallow pullback, 1, 2 trap. I would say this is probably less likely on the Nasdaq because we've already completed the pendulum swing. On the S&P, we haven't completed the pendulum swing yet, right? The ES has not completed that pendulum yet. So the idea of one more leg higher here in the S&P seems to be a little more realistic, right? A little bit less realistic right now in the Nasdaq. Pendulum swings are really, really powerful. All right. Now, also, too, think about how much more difficult this brick wall of resistance is going to be a buyer, right? We may end up kind of walking our way higher here and still coming right back down again. Right. So I like the short side at these highs right now. But again, if we can find our way up, if the buyers can hold that pullback, and if they can give us, a nice strong blast through, right? If we can get that 1, 2, 3 breakout going higher, I have no problem marking that channel, right, and getting in off that first pullback. Remember the objective, just like the S&P, there's a bunch of wide open space up here. 15,000 is a big, easy round number. 15,152 up there, a big range up overhead there. So there's plenty of open space up there if they can give us enough proof going through these highs here. So we definitely will be looking for that, but I wouldn't hold your breath. I think what is also another breakout. We talked about that pop and grind on the S&P, that kind of spike and grind that will definitely work. Right? So we spike up, we grind, we found that channel, we drill down to our faster time frame, get that trap, get that failure, that pullback combo. Again, I'm just simply kind of scribbling on my chart right now. You guys will see hundreds of examples of those, right, as part of that free course that I mentioned earlier. So we won't go much more in detail on that. Another option would be basically a breakout pullback, right? A breakout pullback. Think about this area now. This is a major area of resistance. So let's just say something happens overnight, right? Everyone starts to party, right? And it just runs, okay? At that point now, what oftentimes will happen is that big spike up will get rejected. The market will pull back sharply. We'll use this area, right, this prior area of resistance as an area of support now. And we can start looking for what we call kind of a breakout pullback, all right? So again, imagine now we come out, they really rip higher here, right? Really race higher here overnight. We come in tomorrow morning, way too high up. Nobody wants to buy that, right? No one wants to buy that. Again, it's not a 1, 2, 3 breakout where it makes it easy for us to find that channel. You know what I mean? If we get that 1, 2, 3 breakout, it's easy to find the channel. It's easy to structure the entry. If the market is just going to jump and run higher, a lot of times what will happen is we'll end up pulling back into that prior resistance area, which is now, of course, an area of support. At that point now, we have what? A strong move in one direction. We know the odds are pretty good. They're going to retest the high. In these scenarios, find those areas of support. Again, resistance becomes support. Look for those bears to come in and try to get short off the high. Once they do, their stops are sitting right there, and you can buy right into those stop losses. Now, obviously, I'm simplifying this quite a bit right now, but that's the idea that I'll be looking for tomorrow. If we come out tomorrow, right, and this thing really blasts and runs higher here in the overnight, at that point, now you're thinking, okay, this is definitely bullish. We've broken through that overhead resistance zone, but now we're way too high to buy. Right? When you're really high up, when you're really high up like that, you wait for that nice steep pullback, you trap in those bears, right? Trap in those bears, and then think about where their exits are. You know the target is, right? The target's easy at that point. You know the target's back up to retest the high, right? So kind of a pop in a pullback, right? Or a breakout pullback is a way of looking at that one as well. So again, those are some ways to buy this market here. How do we sell it? Right? How do we sell this? I would love, and again, not a lot has changed here on the Nasdaq and the S&P. If the market runs higher here, right? Let's say, for example, we really pop up, right? We really pop up here overnight. What you got to remember is this becomes a pretty strong move itself. Okay, so the most reliable trade would be wait for it to retest. I'm not interested in buying up here. Again, I'm going to wait for that breakout, right? I'm not going to bang my head against that wall. Wait for them now to retest. Okay, double top effectively, right? It doesn't need to be exactly double top, but wait for them to retest. They usually go a little bit through that high. And then we start to trap in those buyers, right? Buyers try once, buyers try twice, draw that trend line, find that trap level, right? Once those buyers now come in and try a couple times up here, again, they're at major resistance. They've already retested their high. All those stops are sitting right below that low. Again, there's a bunch of different ways we can take this trade. One of them being a trap above that first try. Another one, of course, being a hidden channel off that low, off that high. Those are always some of my favorites, right? Nice strong signal, and we're dumping this thing back down again. Now, when this thing dumps off the high, this can also apply to the S&P as well. When this thing dumps off the high, remember, your job is really just beginning. The good stuff's coming now. Now mark up that new channel, find that swing, and be ready. That's the first test you want to hit right there. Right? And I'll tell you the exact same thing we tell our students in the trade room. If we don't get that reversal off the high, right, that two-try failure, we have to get in off that first test. Okay, that's kind of a must. That's kind of a must-take trade. At this point now, there's a ton of momentum now swinging back in the hands of the bears, and we know right away they want to take that low out, and possibly they may never recover. The buyers may never recover. It may end up all the way back right into that range here. So this is a really, really attractive little setup here off the highs. And again, we may punch up. The buyers may try once. The buyers may try twice. We may never even get back to that high. We may get that two-try failure with that trap. You know, again, we'd like to go back to retest the high, but a trap entry will be good enough for a two-try failure. The market dumps then off that high. Now you've got that pendulum swing coming back down. You have all of this momentum now turning off the highs. There's a big bullseye right at that low, right? Don't chase it. Remember, don't chase it. Find that new trend line. Mark it up to find that new channel. Again, I like to look for traps. Most important thing, though, is draw that channel correctly, get us back above the moving average, and rope in those buyers, right? Bull trap, buyer failure, pullback combination. You'll learn more about those in our free trading course on the website. All right. So again, those are some easy ways to sell this market. And again, remember, if it goes up in V-tops like this, right? Kind of V-tops like this, just wait for that trap, right? Those traps are where your money is. We don't want to chase it as it's going lower. You know, we don't want to chase it as it goes lower, because what will happen is people start taking profit down here. You get in short way down here now, right? That's exactly what happens is you'll see it go without you. You'll chase after it. And right when you get in short, that's when all the sellers who sold way up here now, they're now taking their profit. The price bounces and all the professionals are waiting for that follow-up trade, right, to run it lower. So think about those two tries for the buyers. Try to sell as high as you can sell. All right? Don't let that collapse fool you, right? We run up, the buyers once, the buyers twice. There's that trap and back down, right? We run up, the buyers once, the buyers twice, that trap. Or we run up, we retest the high, then mission accomplished. Now we can get a lot more aggressive on that two-try failure off the high here. And of course, if we don't get the move going higher, and it looks like we're going to try to here, if the market simply rolls over, holds that pullback, and jumps going lower, that's your 1, 2, 3 reversal. Okay, we know where the market wants to go at this point now. So we mark up that low, we mark up that high, we drill down to our faster time frame, right? This is a 4,000 tick chart. We'll drill down to our faster time frames, and we'll find the entry, right, off the high of that channel. First test is the best test. The size of that leg is oftentimes equal to that leg as well. That'll be fine-tune that entry pattern. All right, guys? And then again, if it does just kind of roll over and start to grind down here, that makes your job pretty easy. Just draw that trend line off that low, mark up that channel, think about where those prior swings are, try to get above it, trap in those buyers with your failures, your trap setups, and short that sucker back down. Again, size of that first leg size of the third leg, and you're good to go. All right, guys, so that'll give you a good idea there for how we can sell this thing off the high and buy it. Lot of similarities here on the NASDAQ and the S&P. And again, everything we've talked about in the NASDAQ applies to the ES and vice versa, right? And vice versa. Let's wrap things up here now on the oil. Over on the oil, of course, what's the most important component right now on the crude oil? Well, I think one of them is definitely this big, strong pop lower. What time was that at, right? Like 5 o'clock in the morning. I'm not sure what exactly caused that big spike down, but that really kind of blew up any possibility here, right, for a long trade this morning, right? We talked about this, everything we're looking for that long. S&P and NASDAQ got it, but the oil obviously did not. So anytime we see a strong move down, or anytime we see a strong move, what we expect? We expect those bears to want to come back and retest the low. And that's exactly what happened. And sure enough, they didn't get much more out of it. Right? They bounced off of that low. So that's what's one of the main components, right? This is kind of like the flip side, the kind of the opposite of what the S&P and the NASDAQ are doing, right? S&P and NASDAQ have that big run up. Okay, this is a big run down. They retest that low, right? Do they break through it? No. They reverse and go right back up again. Okay, that's the short side of the S&P and the NASDAQ. What else do we see here right now? This channel, by the way, this channel is not really very important. I just put it on there just as an illustration purpose. What else do we have here? I would say there probably is a range here. It's not the easiest range to see, but you can definitely tell there's something, right? A lot of overlapping candles in this area right here. There's a range right there. It's very convincing when you see the amount we went above the range is right where you can see. I mean, how do you argue with that? Right? So it looks that range is pretty important, which means that this area over here, that's where the money is, right? That's where the money is, right up there. Now look at that pendulum area at 90.50, 90 half. Right? Look at that area up there, right? That also, remember we talked about a breakout pullback? Remember we talked about on the S&P and the NASDAQ, how we get all of that resistance? And if they can kind of break through it, we could then come back and use that level as support. Right? And we talked about that before on the NASDAQ and the S&P. Okay, that's the same kind of idea here. Okay, we got that range there. The market, of course, breaks down. People would love to short that, right? People would love to short that area there. So this area, right? I mean, really, in all reality, it could even be as high as this, really, right? That whole area is an area of resistance, right? So we see that pendulum swing area. Okay, up inside the kind of the underbelly of that trading range, and you would definitely think that area here is going to be on everyone's radar, right? On everyone's radar. You could also, if you want to really stretch your legs a little bit, draw off that low, bring it all the way up around that high. I'm not a huge fan of these big channels, just because smaller channels usually work a lot better. But this is a little bit, you can see, this one's a little bit difficult to ignore, right? So you get this big move down. Notice how I draw the channel, right? I draw the channel off the most recent lows. That's one of the techniques I really learned a lot about over the past, 5-6 years. How to draw the channels the right way, and then when you see them line to the highs, look at the highs up there. I mean, come on, right? It's almost like this channel is just waiting for somebody to come in and smack this thing off that high, right? Look at this area up here. So again, you can see these are a lot of really valuable clues of if the market goes higher. That's why I said earlier, the buyers don't really have much to work with right now. They really got to be careful as we go higher here. So the range is definitely like a second piece of this puzzle right now. What else? What else is kind of working on this right now? I think this trend line could be an issue. This trend line definitely has potential to be an issue here, because obviously if we pull back here right now, that trend line becomes either your best friend or your worst enemy. So that's going to be a definite factor on this. Keep in mind, though, if this market does not go higher right now, this trend line is irrelevant. Okay, so if we come right back down again, this trend line is not even there. I almost didn't put the trend line on the chart, because as you'll learn in our intermediate classes, we talk all about technical analysis. You don't want to draw a rising support trend line until you have a swing low. And that is not a swing low until you get a higher high. right? The only way you get a swing low is with a higher high, right? So we got to make sure we get a higher high there if that trend line will be used. All right. A small detail, but again, very important, right? There's no reason why this thing couldn't go right to trend line right now. That trend line really doesn't exist right now until we go higher. Okay. So as we go higher, how do we trade it? Right? How do we trade it? The key here is going to be the bears would love to go up and short around this area or get underneath that trend line and short there, right? That's kind of the most important factor if the market goes higher right now. Okay. Or how about this? What if we don't go higher? What if we don't get that pendulum swing, right? We call that failed rotation. The market should rotate back and forth like this. So what if we don't get that rotation? The market simply rolls over and goes lower. That's a very bearish clue. And so you would think if we start rolling over here, yes, there will be a lot of bears here looking for ways to get in. Because let's not forget, this is the juiciest trading range I think I've ever seen, right? Maybe not juiciest. We saw a range on gold last year that was like 6 months wide, right? This one, of course, you can see though, it may not be 6 months wide, but look at that, right? That's one hell of a range. And there's a lot of volume right there, 87.5. You got to think those bears would love to go back to that area here, right? So you can imagine if we don't get that rotation, a move back into that trading range below us almost seems like a given at this point. Okay, so how do we buy it? How do we sell it? What are the best entries going to look like here? If we go higher right now, what are my two concerns? It's not location. Okay, it's a great location to sell. What are my two concerns if we go higher? Momentum and that trend line. Okay, so we know how to fix this. If momentum is the concern, what do? We use a 2-try rule. Right? We let the buyers try once, the buyers try twice. The trend line is concerned though. So what's the best entry setup? You guys know this from the free trading course already. What's the best entry setup? Right? It's going to be that trap. Right? That trap allows us now to basically sell as high as we can sell. Then we can look for that breakout, that pullback, and that go from there. Right? So as we go higher here, if we go higher here, again, let those buyers try a few times, rope those buyers in, because again, it will be pretty bullish, right? This is going to be a pretty bull market, right? Once it gets there. So it's going to feel very bullish. We're rotating off that high, but once we get up in that area now let those buyers try a couple times. Their stops are sitting right below that low, and we'll short that trap. Then get underneath that trend line. That's why I said before, this could be your worst enemy or your best friend, right? Get underneath that trend line and hit it again. Okay, kind of a re-entry there or an add-on. Or maybe all we get is the market goes up like this once, twice. We see these all the time, right? Where it combines those two together, right? There's that trend line. There is that 1, 2, and we can hit off that trend line as well. Does that make sense? Right? If it does, if you're enjoying this, hit that like button for me. Make sure you subscribe. If you're still watching this video right now, you are exactly the trader I do these videos for. So I really appreciate you sticking around all the way to the end. Right? If you're enjoying it, hit the like button. Make sure you subscribe, and questions right in the comment section. All right, so that's how I'm looking to sell this thing as it goes higher. Don't be afraid too. Again, if it really pops up like this, right? That 1, that 2, that trap, or we've talked about this before many times already. Maybe it really pops up, right? Real strong move. They retest that high, right? Mission accomplished, and now 1, 2, again, trap, breakout, pullback, and go. I'll tell you, if they get that tomorrow, that's what happens tomorrow, you could easily start seeing something like this, right? Where all of a sudden now, we run up, they retest, double top, if you will. Doesn't even be exactly double top. Okay, they retest, buyers once, buyers twice. There's your first short, right? Then we grab the breakout, pullback, other side of that trend line. Then what is it? Yes, then it's a 1, 2, 3 reversal, right? There you go. Drill down, find that, right? Find that trap, that failure, that pullback combo, right? That's where the money is, selling off this high on the oil, right? Now, how do we buy this thing as it goes higher? Not easy. Like I said, not easy here. There's a lot of, again, that big trend line, that big channel's up there. So we literally have to pop up. The buyers have to hold that pullback, and they've got a jam, right? Like this thing has to short squeeze. We've got to see one of these bad boys over here, right? It has to rip their faces off. All the bears were fooled, ripping higher, right? It's not going to be a move up like this, right? And right? It's not enough. It won't be enough. It needs to rip, right? You need to be like, whoa, that's a very strong move. Because what that's going to be is that will be the bears getting out of their positions. When it jumps off that moving average of strength like that, now you mark up that high, you mark up that low, and your job right now is to grab that first pullback. Okay, remember, size that breakout leg, first leg, size that third leg. You can easily think, right? 91.92 is last Friday's close, right? It makes for great magnets later on in the week. Wednesday, Thursday, Friday, tomorrow's Wednesday. Right? So a nice, easy target as we go. You could also see, too, easily potential for a pop and grind. Pop and grind, short squeeze. So the initial move higher isn't that special, but then it keeps on going and going and going, right? Pops up, grinds. We're way back up now inside this range now. The buyers have obviously taken control of the market. We find that new channel. We don't chase it. We wait for that trap, that failure, that pullback. And guys, where's the first target? The first target is back to retest the high. Second target, size this target, right? Size that leg, size that leg. Now we're getting somewhere. All right, so hopefully this stuff is sinking in for you here as we go higher. What if we go lower here? I'll tell you, if we go lower right now, I don't want to be a buyer down here. I do not want to be a buyer if we go lower here right now. If we go lower, think about something like this: a two-try trap, right? Strong move down, shallow pullback, lower low in price, two-try trap, right? Trap setup. Okay, we see a lot of those. Strong move down, right? Strong move down, shallow pullback, lower low in price, trap setup. Okay, that's one way to do it. Or, right, we simply move lower. Bears come over, hold the pullback, and go. 1, 2, 3 breakout. Find the channel, short that first test, right? First leg, third leg, checkmate. Now, third one, right? Definitely possible here. We pop and we grind. Pop and we grind. Mark that low, mark that high. Find those traps, right? Back up, trap, failure, pullback as we go here. All right, guys. So those are some options as we go lower here. I think we've covered them all, right? Again, 87.5 is that big target. All right, we're looking good. I'm sure there's something I missed tonight. If there is anything I missed, give me a comment in the comment section. Let me know what you think. And don't forget, guys, we've covered a lot in this video tonight. The strategy is pretty easy. The hard part is making sure we do it the right way tomorrow, right? Making sure we don't overtrade, making sure we're not forcing trades and trading outside of our rules. Guys, tomorrow morning, we're going to go over all the rules, all the patterns, get prepped up together. I would love to have you right there with me. We'll prep together. We'll trade together. We'll succeed together. I'll put all of the membership links, all the free trading class links. I'll put all that stuff down, the description of the YouTube video. Again, hopefully you've grabbed that free trading course to learn all the entry setups at this point. And thank you so much for sticking around all the way to the end. I'm proud of you. I appreciate the time here tonight. Call me if you have any questions. I'm always here to help out every step of the process. Don't be afraid to call the office, right? I'll help with brokers and charts. Whenever you guys have questions with, drop me a comment in the comment section, and we'll see you guys hopefully tomorrow morning, and we'll trade this stuff together. If not, you better come back and see me tomorrow afternoon. We'll do it again tomorrow, same time, same place, getting ready for Thursday's trading session. As always, my name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.